What's your big takeaway from the minutes?
So there was one thing that really caught my eye, kind of buried in these minutes, which was the discussion about risks surrounding the inflation outlook. So I just want to read you this quick part here. It says, some saw a risk that inflationary pressures might develop more rapidly than currently anticipated, while several others thought that progress in achieving the 2% inflation target might lag further if the dollar continues to strengthen. So it sounds like when you talk about the members of the committee around the table, only maybe two people see the risk that inflation is going to start running away quickly, while several others are saying, look, there's all these reasons why inflation may still be slow to rise going forward. And so I think that's pretty telling.
So if we go inside our terminal here and look at WIRP, we saw that right after those Fed minutes were released, it had a tiny move to the upside from 36% to 38% probability in March. We're back down to 36%. I mean, it suggests, Joe said it earlier, if the Fed is trying to make no market reaction, they're doing a very fine job. Would you agree with that analysis?
Oh, yeah, absolutely. And I think that's probably exactly what they're trying to do. You know, a lot of people say, well, look, would you hike in March, for example, if the market probabilities are so low? Can you do that?
Right.
And that kind of, you know, it maybe misses the point a little bit that if the Fed were likely to hike in March, you'd probably see a lot higher market probability being assigned to that. So, you know, that argument sort of runs both ways.
So they could move it higher if they wanted. If they were inclined to, they could get it, so it wouldn't be a surprise.
Exactly, and we've seen them do that in the past, notably last year in sort of the May-June time period.
Go ahead. One of the biggest questions, of course, for the U.S. economy, and it's a bit of an esoteric one, but not unimportant, is what the Fed does with its balance sheet when it gets the balance sheet back to normal. They've signaled this time that they're going to start to talk about that at the next meeting. Do we have any sense at all of the plan, the strategy, or the runway on it?
Not really, we don't. And it was interesting because everyone came out after this February meeting, all of the Fed officials, and they started talking about the balance sheet a lot more than they had been. So we were kind of expecting to see some sort of discussion in the minutes about the balance sheet, but really all they said, there was just one sentence here saying that they were going to start talking about it at coming meetings. So they didn't actually have the discussion yet. That kind of shows you the stage where the thinking is at the moment on that.
But you got to decide to discuss it. You got to start somewhere. Finally, you know, one of the big challenges for this Fed right now is anticipating what's going to happen with fiscal policy. For the first time in years, there's at least the potential for something that resembles fiscal stimulus. Did they give any further hints in terms of what they're thinking about policy?
Yeah, you know, they mostly said the same thing that they said in the last set of minutes, which was just that there's so much uncertainty, we need to see more details before we can. But there were a few interesting additions that caught my eye here. The first one was that now they're starting to acknowledge some of the potential downside risks. So maybe that's, you know, trade restrictions, which some of them have talked about in public. And then the other one was when talking to their business contacts around the country, they sound optimistic. They think that this new government policy is going to lead to, you know, better conditions. But some of them were saying, look, we're going to also kind of wait to hire more people until we see what's going on. So that's probably what the Fed is going to do as well.